Hello and welcome back to our trader training video series. On this video we're going to look at a slight variation of finding stocks quickly. The previous couple of videos we focused on using Bollinger Bands to find statistical price extremes, and on this video we're going to look at again a different method to find a statistical price extreme. First thing though, we want to just try and understand the principles behind what we're doing. And it's worth pointing out that when price moves in a particular direction too quickly over too short a time period, what normally happens is price kind of snaps back. It kind of reverts back to some type of median. And we can see this phenomenon happen multiple times where price moves quite dramatically in one direction over a short period of time, and then comes back to, basically to revert back to its average, its median. And again, we can see that this price drop or price rally, it can happen inside the Bollinger Bands. So previously we looked at, we want to see price above or below the Bollinger Bands, but sometimes that short, sharp, fast movement happens between the two bands. So we might not always pick up that particular anomaly, but the movement, the speed of movements will happen, potentially quite quickly in one particular direction. And as we can see, it does provide opportunity, because all we're doing is we're looking for those times where price just pushes in one direction, so we can have a high expectation that it will just nudge back in the other direction equally as quick. Again, we can see a similar example here. It's moved quite fast to the downside there, staying inside the Bollingers, but what we can see is it just flips over and goes in the opposite direction. And again, we can see this ebbing and flowing back and forth on a regular basis. This is what we consider normal price behavior, this yo-yoing back and forth price movements. But what we're trying to identify is that inside of this normal price movements, we will sometimes see quite a fast movement in one direction. So all we're looking to try and do is to try and trade it back in the opposite direction, so it comes back to normal and then carries on doing whatever it was doing. And this is another type of price anomaly. So how we're going to do this is we're going to identify a movement of in excess of 10% of the stock's value that moves in a single direction, either up or down, over a 12-day period. And you could use 10 or 14, I just like 12. So I'm looking for a 10% movement, either up or down, in the last 12 days. Again, the good news is we don't need to go through every single chart every single day. We want to just find those opportunities that present themselves that are ready for us to consider today. So that's what we're going to do. So we're going to add another column onto our watch list. We're going to go back to that little cogwheel, we're going to customize. And this time what we're going to look up is percentage, or start to type it per. So what we're going to get is percentage, there we go. So percentage CHG, so percentage change. I'm just going to add that item, and I just want to check that it's, so here we go, the default's 14, I just want to use 12, a little bit of a short period. If you want to use 10, that's okay as well. I just like 12, it's personal preference, nothing more than that. Use 10, leave it at 14, I like somewhere in the middle, which is 12. So I'm just going to click OK, and again what we'll see is a new column appear, and we can see that it's just loading. And what this column is now showing us is the percentage change over the previous 12 days. So it's going to take the current price and it's going to look back over the last 12 days and tell me whatever the price was 12 days ago, and it's going to tell me the percentage change from that price 12 days ago to the price it is right now. And we're going to pop that in table form so that we don't have to look at every chart, and we can just very quickly see how far a stock has moved in the last 12 days. Because if it's moved a lot in a short period of time, that might highlight a price extreme where it's doing something abnormal. Remember, 5% of the time, the stock price does something weird. And that provides our opportunity because 95% of the time, price acts normal. This is that standard deviation. This is probability theory. It's tied in there, which we'll look at on a separate video. It's normal distribution is another way of looking at it. This is what two standard deviations represent. 95% of the time, price is normal. So if we find those times where price is doing something weird, that's our statistical advantage. So again, another way that we can find that opportunity is to see how far and how fast a stock price has moved to find that opportunity. And similar to the Bollinger Band percentage B, so that's the percentage change column, I can just sort that column high to low or low to high. And we can see straight away here that this means that we can ignore the bulk of the stocks. They're either up a few percent or down a few percent. Again, that's normal. Over a 10-day period, even if price is trending up or down, stock prices will behave normal because that's what they normally do. So we're looking for those anomalies. I'm going to use 10% as my benchmark, and straight away we can find 3 or 4 stocks that might be worthy candidates for us to explore further. We're still not putting a trade on, we're just exploring further. So let's just take a quick look. CMG, some of you may have eaten there, but we can see over the last 10 days that the stock price has moved quite dramatically. I don't think it's doing anything exceptional. We'll talk about how to interpret this later on, but I'm just trying to show that over the last several days, we can see that the stock price has moved dramatically in a single direction. There's further filters for us to explore, but just again to illustrate, we're looking for the last 10 days. We can see that the stock price has moved quite dramatically, and it just puts that opportunity on our radar for us to keep further attentive eye on what's going on, to see if there's an opportunity for us to trade today, or should we just continue to keep an eye on it. So that's our second method of finding a statistical price extreme. We've looked at Bollinger Bands and using the standard deviation over the last 20 days as a means to identify that opportunity, or we can look at how far and how fast price has moved to find our second opportunity.